Cutzler YMX uses the Netradyne two-way camera system in all of our power units. The Netradyne cameras have more than once exonerated a driver who was perceived to be at fault, as well as saved our Cutzler YMX from paying damages related to an accident. We are already seeing, just in 1 year of Netradyne, the impact of better safety scores and fewer damages and incidents in our insurance rates.
And here we are on yet again another Thursday, 30 minutes later, for those of you tuning in live. Those of you not tuning in live, you'll never know. So Zach Strickland here, head of Freight Market Intelligence at Freightwaves. Tony Mulvey,
senior analyst.
So heading into the Labor Day holiday weekend this week, and for those of you watching after the Labor Day holiday, as a lot of you do, this is kind of a pivotal point in the freight market. We talk about July 4th being the summer peak. Then there's, of course, peak season around the holidays and the winter. And Labor Day's been sort of a mini holiday period, especially during the COVID era, which we are no longer in, thank goodness. But we're still feeling some level of impact from that.
Oh, absolutely. I mean, you're starting to see it kind of show up in the data that there's impacts coming from Labor Day. And I think that was where I know your eyes were kind of looking to maybe at the beginning of August. I think what's interesting, it's been kind of muted relative, like a little later than I thought you would have seen some activity or some.
Yeah, we kind of returned to a 2019-esque tender rejection index, which I'll talk about in a minute. But we also have Adam Lang, Director of Customer Advisory Services from Netradyne, going to join us today to talk about some benefits of the technology that carriers probably should be utilizing at this point, considering the challenging environment that they continue to operate in.
Absolutely. So thank you, Netradyne. So remove the guesswork from driver management and fleet safety and start predicting your accident reduction cost savings. Netradyne's AI-enabled video safety platform corrects unsafe driving habits, recognizing and reinforcing great driving. With the Green Zone score, your fleet of engaged drivers will protect your bottom line. Every 50 points earned is a 14% cut to your accident rate. So pretty impressive.
Yeah, I mean, we're going to talk about, we had some, John Kingston, of course, covers the BMO report there about the carriers. We'll get to that in a bit. I mean, some of the stats that we're seeing are alarming. Yeah. Like, I think we're getting to a point where the risk of a pretty dramatic shift in this environment is almost likely at this point. I think we've been holding out that a softish landing might be a thing, but I don't know. I just get the sense that we're in kind of this calm before the storm environment.
Absolutely. And Zach, I think that leads into a perfect time to kind of set the stage with the market in two. So I'll count you in 3, 2, 1.
Yeah. So let's lead off with our tender rejection index. The white line is the current year. Last year is that light blue, North Carolina blue line there. In the orange line, 2019, it's hard to say that we're comparing 5 years ago as kind of like our baseline, but that's been the case because COVID was a thing and it did exist. The green line, of course, is 2022. I have removed 2021 from the history here because it's elevated and we do view that as a pure anomaly. But the read here, if you look at the very end of the white line, we've got a little bit of an uptick, and that uptick almost perfectly mirrors the 2019 environment. Over the summer, we had tender rejection rates exceeding 2019. I wrote an article about it, and then almost immediately, the tender rejection index diverged from that 2019 line, and it stayed above it. So I was thinking, all right, we've transitioned through that period. Things are shifting. Well, we've come back down, and I think a lot of that reason, of course, has been derived from some stability around Los Angeles. This was not necessarily the signal that the entire market is out of capacity, but more of a network strain as carriers were not in position around Los Angeles. And of course, the rails came in to help with that. Moving on to the next chart, bringing it down into refrigerated and van. The refrigerated space on top, if you look at that white line, or the line up there on top, that is the refrigerated tender rejection index. It is much higher than the van side. This is the story of the market. The refrigerated sector appears to be in a much more challenged space than the dry van side, which represents most of the volume in the market. Let's move to the next chart and talk about the spot rates. Looks almost the exact same thing over the last year. Spot rates for refrigerated on top in the RTI, and the National Truckload Index on the bottom represents dry van on the bottom. Refrigerated spot rates and rejection rates continue to trend higher, and somewhat stably so. Last chart, last but not least, tender volumes. This is not a demand side situation. So tender volumes represent both van and refrigerated, and it's like demand really hasn't changed.
Yeah, no,
Like,
it's been fairly stable, really, almost all year. I mean, it's slightly higher than where it was kind of first quarter, early second quarter, but I mean, not really all that different. I think what's interesting is you saw that slight uptick in rejection rates, like not significant yet, but I mean, it's moving in a direction you would expect. Tender lead times, which we didn't have in here, started to creep higher, which is expected around the holidays. You would expect, slightly longer lead times, just because, I mean, if you have facilities closed on Monday, and you need things booked in advance, like you're booking it for Tuesday instead of Monday, like what you would have been booking Monday, you're now booking into Tuesday. So it's just slightly longer, and you're seeing that actually show up, which is kind of a telling sign that there is some impact. It may not be as meaningful as, call it, 4th of July was. Definitely not as meaningful as 4th of July was.
Yeah, and of course the data itself suggests that intermodal has been much more reliable than it was during COVID. So it's actually helping relieve some of the pressure on the Southern California markets. Transloading behavior, talking to Mike Bowdendistel earlier in the week, transloading efficiency has improved. The empty containers are coming back to the West Coast with much more efficiency and quickly for both the international and domestic container side. And then the Canadian strike came and went in a big, it had a big splash in the people that were involved up there for about a day or two. And then that feels like it has resolved. Of course, the looming upcoming ILA situation on the East Coast, I feel like that has the biggest potential for disruption later, but we haven't really seen that manifest in anything that we can tell thus far. A lot of this, imports are still coming into the West Coast, and it's just not a thing right now. But anyway, I digress. So before we bring on our guest here and talk to Netradyne, I want to kind of set the table too, because this is something that Netradyne addresses, is the challenging carrier environment. They're trying to help improve that situation for them. And it's just a really, really challenging place. And it's gotten worse based on this article by John Kingston, basically saying that, BMO Q3 numbers slow even more due to trucking credit deterioration. And this is, of course, the former Bank of Montreal. It is not covering purely Canadian carriers, mind you. They lend 90% of their portfolio is carriers across North American continent. So it is not just simply Canada, if you will. So the chart that they have here, or that John Kingston tweeted about BMO transportation group allowances by quarter. Now, what an allowance is, as described by the Fincyclopedia, which he cites in the article, as being created and maintained against potential losses and certain risks. It is taken as a result of management's estimate of a certain probability that may adversely impact the value of its assets. So basically, they're calling it bad debt. So they're saying, hey, this revenue may not exist in the whatever time period that they're saying that this is based on. But Q3, it more than doubled.
I think that's the part to take away. It's just like it's gone from, call it, bad to worse. I mean, more than doubling. Then you got the net revocations in here. And what's interesting here is like it's trended lower. But I mean, it's still well above where, as kind of expected, well above where it was, call it even prior to the pandemic.
Yeah, a lot of the revocations data on the back end actually is, if we want to pull up the net revocations chart, this has been a trend line though. I mean, we had this big bulk of net revocations, but the market hasn't gotten better. Yeah. I think the way to read this is there was a bunch of weaker operators that came on and maybe didn't know what they were getting into, and we've kind of churned through them early because, just like any environment, that the weaker ones kind of fall out quickly, and we've kind of churned through that. Now what's left though, and the BMO almost supports this theory that I have, is we have this carrier base. They're stronger operators. They've been around longer. We know that too as a fact based on some of the FMCSA data that we have. They're stronger, longer operators. They're bigger fleet sizes, which would explain why we see a big jump. Is some of these mid-size, maybe these larger, smaller fleet sizes are more at risk now, whereas before we saw some of these smaller owner ops with less debt exposure.
Yeah, I think that, I think back to 2019, that's right when I started. I mean, within the first 2 months of me being at Freightwaves was when Celadon went out, and we haven't had, they had some troubles on their own, but it just kind of it just highlighted like that cycle. We haven't really seen that happen yet. Like we've seen, there's been a few fleets in that 100 truck range, but there's been nothing much larger than that. And it's been few and far between, if that. So like, I think that's what I'm looking for is like, it sounds bad, but like, that's what you're looking for to show kind of, okay, the end of this cycle, because these larger operators, not the single owner operator, like they're facing challenges now of like what they're doing. And even the largest ones, they're not in financial risk, but they're parking equipment. Right. So like they're doing things they can do to reduce the amount of capacity in the market. So kind of interesting there. It's like they're not at risk, but they are taking, strides to reduce capacity in the market.
Yeah. And carriers or anybody, God bless anybody that has jumped into the trucking environment. And I feel for you for sure, but it is not for everyone. Yeah. It is a very challenging world to live in. You've got these cycles that we're dealing with right now, given everybody thinks, oh, that's the black swan. No, this happens regularly without the scale that we have today, but it is a very challenging environment. So I want to bring on Adam Lang, Director of Customer Advisory Services, who is joining us today to talk about how, some of the things that we've talked about in the past is just the environment that carriers enter. It's really hard to navigate without the help of some level of technology nowadays. You have to invest in technology if you want to have an edge or a leg up. It also can help mitigate your risks, something I want to talk today about. But thank you for joining us today, Adam.
Well, thanks guys for having me on. This is a great opportunity to talk about some risk in the trucking industry, which we know is very high, and you have to love it to be involved in it, right? So I appreciate all your former comments. A couple of things. We're coming into an interesting time as well, because I noticed that today fuel prices, diesel fuel prices, are about 17% lower than they were this time last year. And we've gotten some strong signaling about interest rates falling. So a couple of good pieces of news for motor carriers out there that are trying to fight the doldrums that they're dealing with right now. But there's definitely a lot of risk in terms of what you're doing with safety, what type of programs you're taking advantage of, and what you're having your employees focus on as kind of the things that you want to stray away from, which definitely is litigation and nuclear lawsuits.
Yeah, Adam, I want to touch on that for a second because, yes, the cost of operation has increased dramatically over the last 5 years. What have you seen in terms of, litigation and these liability? How much of that increased of cost has come from the liability side, do you think?
It's a lot. I couldn't give you an exact amount, but when I talk to motor carriers, and I worked for a motor carrier for 10 years, very, very strong larger mid-sized company in the Midwest, and does a fantastic job that we work with directly as well. But your appetite for risk changes when you have some situations in the market like we do right now. And some states have taken action to put some limits in place, tort reform as we hear it. And that's great. It still doesn't eliminate some of the large awards that you could get for economic damages or for punitive damages. A lot of them focus on just non-economic damages like loss of consortium claims, things like that. But it's still a large risk. And it seems like the plaintiff's attorney's missions are still to put the motor carrier in the hot seat and show how they were negligent, rather than it being, a terrible tragedy, a moment of indecision or a moment of a bad decision by an individual versus a pattern of behavior by a motor carrier. And the motor carriers that we work with and have as customers, when I talk to them, I hear their pain because they work so hard. They put everything they can into safety. And by taking advantage of some of the technologies like Netradyne, you can actually make a lot of sense out of the behaviors of a driver on the roadway. And also recognizing that these men and women in the trucks have a very difficult job, one of the toughest in the country. And by and large, they do an excellent job. And we recognize that. And that's why I love our product so much. And I did when I worked in the trucking industry directly for a motor carrier, because it not only highlighted the areas drivers needed to improve on, but also it highlights the things that they're doing right. So you have a total package when you're talking to a driver about, constructive criticism, but also the positive things that they're doing. Yeah, you're creating separation after somebody cuts you off, or you're moving over for stalled vehicles on the roadway, or you've gone a certain amount of miles or time without a distracted driving alert. I mean, these are real things that we're measuring and rewarding and notifying the companies about when their drivers do it. And those are the conversations we want to have alongside the conversation where, you're following too closely, and these types of rear end collisions where following distance and speed are a factor. We want to work on that. And just being honest with drivers and letting them know what kind of risk is out there for these lawsuits, company risk, driver risk, usually goes a long way. Drivers are people like everybody else. Treat them like people.
Absolutely. I think one of the interesting things is, like, sometimes it's really hard to put a number kind of on the bottom line of what the litigation, like, if you're not going through that, right, trying to drive, the ROI of safety and things like that. I mean, what are some of, like, the biggest technologies that are driving improvements to the bottom line, that kind of staying out of that litigation phase?
Well, it's interesting, and of course I appreciate you bringing that up. What we've noticed is a trend in customers, what we call our green zone score. The green zone score is basically a measure of the driver's day, like what behaviors that are engaging in and what behaviors that are avoiding. And we look at it very uniquely. Think about this, if a driver runs a stop sign or coasts through a stop sign, we don't want to see that. But if they've stopped at 25 out of 26 stop signs, their score for the day is going to be a little bit higher than someone that stopped at half that amount. And obviously they've got a stop sign problem versus the person that stopped at 25 out of 26, that one moment of error. So it's a different kind of conversation, different type of scoring. But what we see is that with the higher scoring fleets, they tend to have lower DOT recordable incidents. And we all know that those can be preventable or unavoidable, but all of them are exposure, right? So even a non-preventable, everything the driver did in their power to avoid the incident, well, it's still a DOT recordable collision, and you can enter it into the crash preventability program, all those great things, but it's still exposure. It opens the door for someone to say, hey, Mr. Motor Carrier, we think you did wrong. We're initiating a lawsuit, even though there might not be any fault on the part of the motor carrier. But we see some great movement with the carriers that get higher green zone scores, that are coaching more frequently, that are using incentivization programs. Their numbers seem to be higher in green zone and lower in crash frequency. And, crashes range across the board. You might have an injury crash that levels in at $200,000 for a reserve from your insurance company, or it might be $50,000, depending on the venue and depending on the injuries, of course. Towable crash might be anywhere from $5,000 to $100,000. It just runs the gamut. But I mean, if you can see a 14% decrease year over year when you put our system into place, and maybe see a decrease in your DOT recordable collisions because you're coaching more often and raising more awareness with your drivers, well, that's money back in your pocket. That's money, that's exposure that you never had. And if you're running a lot of miles across the United States, we all know that's a lot of exposure. So we want to remove that exposure, incentivize the drivers, but also reduce that risk. So through coaching, through positive incentivization, through all of those things, I feel like our system is very good. I'd also like to throw out there, things that help with equipment, like, tire pressure monitoring and automatic inflating devices for tires. Brilliant concept. And I think that goes a long way with motor carriers and reducing their expenditures on maintenance costs. More fuel efficient measures are, of course, great. That's one of the largest expenses, if not the largest expense at most motor carriers, is fuel. And just being more efficient with their hiring processes, holding true to their hiring requirements, and don't hire on drivers that have a history or it conflicts with your hiring requirements. Because again, in a nuclear lawsuit situation, attorneys are going to ask for your hiring requirements, and they're going to see, did you diverge from them just to seat someone in your truck?
Yeah, I like that you guys really take more of a positive approach to like reinforcing good behavior. We're at a data company. So I love the concept of having data that you can watch. Like what gets watched gets fixed, you know what I'm saying? Mm-hmm. So, I mean, have your customers utilized this data to kind of like, now that you have some hard coded data, it's like, oh, I know so-and-so, you hear things anecdotally, and you're kind of slow to really take that on. It doesn't become real until you have something that measures it. Do a lot of your customers use that data to really help them understand and have something kind of a rock to stand on with their driver?
Well, I'll tell you, I mean, working with some of these customers and being a technology company, you would think that, okay, we're the technology company, so we're going to be the experts. And by and large, we are. But it's very interesting, the concepts and the ideas that our customers bring to us, mm-hmm. because some of it is so simple and so brilliant at the same time that you wouldn't even have considered it. And so being involved with our customers is definitely a favorable thing. We want to be very involved with them, and we are. There's some interesting things that our customers are doing with the data. The ability to look at, for example, like the CAN bus data, the ECM data, during an alert cycle, when something's happening on the roadway with an alert, what is the equipment doing and what is the driver's reaction to the situation? And I feel like it's going to become kind of how do I want to say this? Like a leading indicator of future risk. So if you have all this data from across the country and billions of miles and billions of minutes, can you hone in on potentially areas of the country that have more risk and more accidents, more stop sign violations, more stoplight violations? And can you do something about that? Can you partner with the DOT in that area and say, hey, there's a lot of stoplight and intersection crashes here. and this is backed up with data. It might be a specific motor carrier that's bringing that up, or it might be some technologist bringing that up. But more of that data is going to help improve safety by just looking at it. It's objective. There's no subjectivity to a collision. It happened, right? And you can look at the root cause of it, but again, it's exposure. So where are they occurring at? Is it happening where there's more bottlenecks, or where there's more people, more vehicles? That would tend to be the logic. But there might be areas where the country is underpopulated, or there's not as much traffic, but they tend to have more incidents and more accidents. And again, that can help with the folks that design and make the roads. That can help with your safety department knowing the risk when you go through a certain area of the country. I mean, there's limitless possibilities to that data.
Awesome stuff, Adam. Well, thank you so much for joining us. Real quick, we've got about 10 seconds. Where can people go to find out more about you and Netradyne?
Netradyne.com. Go to the website, check it out, look at some of our white papers. You can chat live with someone. You can call the company, phone numbers listed on there, but I would recommend just going to Netradyne.com on your phone or on your PC and giving us a shout, because we would love to work with you, love to have you as a business partner.
Thank you so much. All right. Well, we'll see.
Yeah, we'll be back next week.
Yeah, we'll see you next week. College football kicks off.
College football.